to wish you the best of luck and hope things work out for you. Thank you for joining us today.
Thank you. I appreciate your support.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, President Trump saying he has no intention of firing Jay Powell before the end of the Fed chair's term next year. The Wall Street Journal says that Treasury Secretary Scott Bessent was among the advisors who warned the president of potential market turmoil and a legal battle. OpenAI CEO Sam Altman is stepping down as chair of the board of Oklo. Altman's involvement in helping the nuclear energy startup raise funding and go public had been a draw for investors, but his departure will open the door for the company to provide power for other AI firms. And the European Union hitting Apple and Meta with fines over issues that the regulator says are anti-competitive. Apple's fine is about $570 million, and Meta's is about $299 million. Both of those companies have said they will appeal. And guys, this is really interesting, too. Meta's chief global affairs officer, Joel Kaplan, has put out this statement on this. He says the European Commission is attempting to handicap successful American businesses while allowing Chinese and European companies to operate under different standards. This isn't just about a fine. The Commission forcing us to change our business model effectively imposes a multi-billion-dollar tariff on Meta while requiring us to offer an inferior service. And by unfairly restricting personalized advertising, the European Commission is also hurting European businesses and economies. But interesting point for them to make, probably in a bid to get some attention from the Trump administration, that these are tariffs and other non-competitive things, that the barriers that the administration has been trying to fight with some of these.
And it was a beautiful inauguration, right?
From Meta being there, from
just, I mean, I think they, yeah.
Yeah, I think this is part of it. And Joel Kaplan, remember, a former Republican who served in the White House under George W. Bush, was brought in to be the head of global affairs at the same time the president was being inaugurated, too.
When you do hear that, though, you wonder, I mean, we probably know about the tip of the iceberg of things that, and in business is war, and you know, every time we want to do America first, you can't blame Europe for
But the
EU
Digital
first.
Markets Act is just a way to hold these companies up and shake them down.
Right. Futures this morning after quite a snapback session yesterday. In fact, the Dow, if you just, you know, left on Sunday and came back on the end of the session yesterday, you'd think the Dow was up like 40 points. But in the meantime, went down about 950 and then back up 1,000. Let's get to Dom Chu. There was a look at this morning's pre-market movers, Dom. I need to ask you a question. Did you know that the Chevron was a major before Becky gave them, put them on the map yesterday? Did you know?
Well, Becky certainly put them on the map, but I did know that it was, you know, it was the former Dinah Shore, right? I think a lot of people who kind of have been golf fans for a while kind of remember the Nabisco Dinah Shore Classic and everything. And then that was where they, you know, they jumped into the pond, Poppy's Pond and everything else. And
we got to put it on our radar.
Yeah, no, well, I mean, listen, it is a major, and by the way, kudos to some of the corporate sponsors out there like Chevron, KPMG, and others who have ponied up big money to kind of help elevate and raise, you know, women's sports, especially for golf. So I'm watching. I'm a big, the reason why I say it is because the Augusta National Women's Amateur, you know, over the last couple of years, has been the same weekend as the Chevron, and so it kind of had you had to compete, right? You had to kind of wanted to watch and so now that they have it a week or so, a couple weeks apart, it feels a little bit better. Anyway, I do have some big earnings movers to get to this morning. We're going to kick things off with Tesla. Those shares are up just around 7% right now. The EV giant reporting after the bell yesterday with results missing both revenue and profit estimates. Total revenues fell 9% from a year ago, while automotive revenues dipped by 20%. The company also held off on promising growth this year and said it will revisit its guidance in the second quarter. But Tesla investors are optimistic on some of the news from the earnings call when CEO Elon Musk said that his time spent running the Department of Government Efficiency, or DOGE, for the Trump administration will drop, quote-unquote, significantly starting next month. So Tesla shares up nearly 7%. Also, let's go to Dow component Boeing. Shares are also making gains up right around 5.5% or so. The company's first quarter loss narrowed to $31 million. Revenues actually rose 18%. and airplane deliveries jumped 60% from a year ago. We also got an update on Boeing's best-selling 737 MAX model jet. CEO Kelly Ortberg said today that the company is preparing to ask for approval from the FAA to ramp up production of the jets to 42 units per month this year. So we'll see how that plans out. Boeing up 5.5%. And we'll end with a check on AT&T. The stock is up about 4% after beating first quarter revenue targets. Those results were boosted by higher than expected subscriber growth. The company also reaffirmed its full year financial and operating guidance and said it plans to begin a share buyback plan in the second quarter, the first buyback plan since all the way back in 2020. So, Andrew, AT&T up 3.5%. A lot of news out there on the earnings side of things. I'll send things back over to you guys.
Okay, thank you for that. Coming up, futures this morning jumping after President Trump saying late yesterday that he doesn't plan to fire Fed Chief Jerome Powell. We're going to talk markets right after the break. Plus, crypto with a big move over the past 24 hours and optimism over U.S.-China trade relations. We're going to speak to the head of institutional strategy at Coinbase about the belief that digital assets are decoupling from big tech. Squawk Box coming right back.
On a $100,000 US dollar margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better, and not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
This is CNBC on assignment at L'Oréal's U.S. Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our number one market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures, and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone, or your hair type.
Talk markets and gains in the free market this morning. Joe is really riling me up during a commercial break. Joining us right now, I can't even talk. Andrew Sliman, he's the senior portfolio manager at Morgan Stanley Investment Management. I apologize. I mean, he was here.
He was here.
He was privy. I'm sorry that I completely lost. I've lost the plot. But I think we're all trying to understand what's really happening in these markets. The markets are up on the back of this news that the president effectively says he's backing down. I'm sure he doesn't want to say he's really backing down. The question is, are we just all lemmings, like listening to, you know, he's going to be tough, he's not going to be tough, tomorrow maybe he's going to have to be tough again? How do you see it?
I think the Wednesday, April 9th was an important day. Because on that day, Trump came out and said, I didn't like what I saw in the bond market. I didn't like Jamie Dimon saying there's a recession coming. And he said, so I'm putting a 90-day pause on. So in my opinion, what he really said is, tariffs are important to me, but a recession's worse. And so there's the priority, which he basically gave you the indication. There is a Trump put out there. I don't think it's down 10, 15, but it was when the market was almost down 20,
right.
Credit spreads started to quake.
Okay, so let me ask you a different question. As these quote-unquote negotiations over tariffs play out then, it seems to me if you are another country and you've now watched all of this play out, you say, when they come to you and say, well, by the way, we want to tariff you, you got to give us something, they look right back at you and say, give you something. Maybe you should give me something. Meaning, I don't know if you can get anything from these other countries for all of this. And so the question is, how can he, meaning the administration Trump, have a win in all of this when I imagine that these other countries are at this point going to try to embarrass him if they can?
Yeah, I mean, except...
And then how does that play out in the market?
Sure. So, look, as it pertains to market, and Joe, I think you've talked about this, the market started the year too expensive.
Yeah.
And 20% years, you're inevitably going to have kind of a pause year the third year. I don't think it's going to be a negative year because not enough money came into the market the last 2 years. But we started the year with way too much optimism. The average price target was 6,600, right? So now we've washed away a lot of that optimism.
Okay.
That's healthy, right? But at the end of the day, the more the market goes up, I still think maybe we get to low 6,000s by year end. So we're going to have these, like, you know, these back and forth, and we got too oversold. Too much optimism. I think it's healthy.
Right,
now the price target is 5,900 on the S&P.
Yeah, but Becky just interviewed a guest on the broadcast. I don't know if you saw a small business that makes toys. And maybe not just a small
Big
business.
issue.
There's a lot of companies that aren't just, it's not just about whether they're overvalued or this or that. It's like a real thing. It's like a knife fight day in and day out just to survive.
And they're not being in line at the White House. You're absolutely right.
And I think that's the bigger issue. For small businesses, they don't get the exemptions. They don't get any of these things. We had Savita Subramanian on this morning. She said she wouldn't recommend buying the Russell 2000.
Totally agree. Totally agree.
Now, if the president changes his mind and finds ways to maybe set a tariff at 10% or something along those lines to have these tariffs here to get some of these deals cut, would that change your mind on the Russell 2000?
Yes, but at the end of the day, for the stock market is driven by big companies.
But the economy is driven by small companies. They have 80% of the GDP growth. They have 80% of the jobs.
He doesn't want a recession.
Right.
He doesn't want a recession, so he will pivot if he sees bad signs. Now, the question is, will it be too late? But at the end of the day, for the stock market, I think the bigger issue is you have a group of stocks that make, the Mag 7, and they're spending a lot of money this year, unlike past years, and they're saying, Andrew, don't worry, it's all going to work out fine. And so this is weighing on the stock market.
Okay, but the flip side is, so I was with Dan Loeb yesterday. We interviewed him and talked about that interview a little bit earlier. He's out of most of the Mag 7. I think he's still got a little bit of Amazon. Do you say to yourself, though, now, given where their stock price is, that now is a buying?
No.
No. Not
I don't
still
think
falling.
so, because these companies are saying to you is, they're saying, Andrew, don't worry. All this spending is going to work out just fine. And the stock market is going, maybe, but we're not so sure until we see it. And so I think, they make a big weighting in the S&P, so they're weighing on the stock market this year.
Okay, so then what works in this environment? Gold works, apparently, though it's retreating from record high right now.
Other parts of the S&P, the other 493, they aren't as expensive, right? And so I think it just all goes back to the S&P is probably not going to be the best place to be this year.
If you were playing either ETFs or, there's a whole bunch of people who aren't buying individual stocks.
Yep.
And they're buying sector-specific stuff, or they're buying sort of broader things. What do?
I think the equal weighted will outperform the cap weighted. I think there's other sectors. I think financials will continue to do well this year. I am very wary of earnings estimates right now because, it kind of reminds me of COVID, right? Which is people were making guesses on what was going to happen. They really don't know. But I think there's other areas. I think other parts of the world. Right. I happen to think Chinese equities will do better than the U.S. this year.
Right. Want to thank you for coming in. Nice name, by the way.
Yeah.
Ever an Andy? A Drew?
For about, told me last time on, for a short period you were a Drew, I was short period.
I tried to be a Drew.
Yeah.
You did?
I tried to be an Andy. I went to camp. I tried to be an Andy. It never stuck. I couldn't get anyone to ever call me Andy or Drew or anything else but Andrew.
When you tried to be a Drew, did you say, call me Drew? I mean, how would you?
Yeah, I think I went to camp for a summer.
And you said, yeah, I'm Drew?
I said,
I'll call you Drew if you want.
You know, I just thought, back then, do you remember, Drew was a cool name because, what's his name on Friends? Wasn't it Friends?
One of those guys?
Wasn't one of those guys Drew? No, not Friends. What's the other show? There was another show. Drew was like a good name at one point. It was better than Andrew.
Do you
Like
want us to
90210 or something?
Yeah.
But you know, Andrew has lasted. I see kids.
Andrew has lasted.
People having kids.
They still name him Andrew.
Yeah.
Yeah.
Drew Carey?
Oh, it wasn't
Thanks.
Carey. No.
Now I got to think what it is now. It was a cool Drew.
We'll figure it out in the commercial. Anyway, up next, Meta facing a number of challenges, including fines by the EU, a tariff ad squeeze, and an ongoing antitrust trial. Julia Borston joins us with a look at why one big Wall Street firm sees big headwinds for the company. And later, street reaction to Boeing results. That stock this morning up by 5%. We'll be right back.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by...
My mentor always told me that your career is going to be a marathon, not a race. Often, you're not the only one running, so learn from those in front, support those behind, and when it counts, win well and lose well.
Kelly Evans, The Exchange, CNBC.
Time to lower the rate, and would like to see our chairman be early or on time as opposed to late. Late's not good.
Mr. President,
I don't want to talk about that because I have no intention of firing him.
President Trump yesterday in the Oval Office speaking about Fed Chair Jay Powell. Joining us now is Nathan Sheets, Citi Research Global Chief Economist. Nathan, it's good to see you. I guess I'd just cut to the chase and ask you, all things considered, are you completely opposed to lowering rates right now? Because it depends on your perspective, I know, but I could almost argue for it, which would be fitting that the president could actually be right, maybe not for the same reasons that I think they should be cut. What do you think?
Well, this is a great question. My sense is that the economy is being hit by a stagflationary shock. And what does that mean? Well, that means we're going to see upward pressure on prices and inflation and downward pressure on GDP and growth. And, the Fed is kind of torn in two directions at the moment. And I think the policy prescription here is to wait and see. Indeed, I think if the Fed cut rates, you'd see higher longer-term rates.
and you're likely to see a lower equity market. But over time, say by the end of the year, I do expect that the Fed is going to be cutting. So I agree with the direction, but just not with the timing. I don't think now is the time. We've got to see a little bit more of this tariff play through.
We're asking too much of the Fed to be able to see the future. That's what I wish they could do. Because if we are, I was just thinking that tariffs could be a one-shot price increase, but the GDP slowdown could last longer because of the uncertainty and be more long-lasting. So I thought the risks were greater on that side of things, and it'd be great to get out ahead of that. But the Fed, like when they needed to raise rates, they didn't have a crystal ball then either. And it's always in the rearview mirror, and I don't think you can really be like the most phenomenal Fed chairman in the world would be if you could see out 6 months, but they can't.
Yeah, and I entirely agree with your analysis there. I think that the growth shock is more severe. It's likely to be more long-lasting here. But before the Fed can really pivot hard in that direction, it's got to make sure that inflation expectations are well anchored and that the markets and that the bond markets are convinced of that. So it would be helpful if the Fed had that crystal ball. It would equally be helpful if the bond market had that crystal ball and gave the Fed that latitude. But given where we are at the moment, I really think it would be a risky strategy for the Fed to try to get too aggressive on the cutting side of this at the moment. But again, over time, I think that's likely to be where they're going to land by the end of the year. Much more probability the rates are lower rather than higher.
Then what was the president and all the presidents meant? Actually, it was really not all of them, but at least Kevin Hess said, what was that about? And do we ascribe some type of, I don't know, some gaming the system or massaging things for him to say that in case the market, in case the economy does weaken, he can say, I told you it was Powell's fault? Or is it just a real estate guy? Was it that simple? He just, hey, I like he's always liked low interest rates. What was that? Why'd he do it?
It's challenging and probably even dangerous for me to try to speculate on what President Trump's intentions were here. But I think it is very political that if things in the economy deteriorate, and it's possible that we could have a few pretty rough quarters, I think that President Trump is setting up the Fed and Jay Powell here to take some of the heat for that. And there is a narrative now that, well, maybe the Fed needs to be more aggressive, and it's not the administration's policies, it's the Fed's policies that are the problem. I don't share that view, but that's a narrative that it feels like the administration is advancing. And as you've said, it's a competing one.
So 428 on the 10-year. When do you join the camp of people that are really worried about, investments coming into the United States, other country and sovereign wealth funds buying our bonds? What would be the number? 5%? Where would it really be something other than just, worry warts?
My sense is that we are in a place where a lot of foreign investors are kicking the tires of long-held presumptions about U.S. exceptionalism. Now, at the end of the day, my view is that there really isn't anywhere else to go. I don't think the world has been in love with treasuries or in love with the dollar over the last 10 or 20 years. But there's just not yet viable alternatives out there for the broad swath of the investment community. So I do think it's going to manifest itself in rates. And if I were to see, say, a 5% 10-year, that would make me very anxious and suggest that there's something here going on that's more pernicious and deeper than just ongoing kind of market adjustments to a tariff policy.
And then when you talk about that, what you just said, that just goes for the dollar too? Same thing, same animal?
Yeah, the dollar is really, this has been an extraordinary episode in that we thought, based on our theoretical models for what they're worth, We thought that the dollar was going to appreciate in the face of tariffs. And instead, we've seen a marked depreciation of the dollar. And what's happened? Well, as I've said, foreign investors are putting a higher risk premium on U.S. assets, and they've been selling. And that's put downward pressure on the dollar. And the dollar's been strong. You know, if this were to continue in this kind of a trajectory for several more months, I don't think, again, it's imminent. But if it were to continue for a while, then I'd again start to worry that maybe we're losing confidence here in a deeper and more sustained way than just the adjustment associated with this tariff policy.
Hey, Nathan, I think it's interesting, too, that this is happening while the ECB cuts rates, but our Federal Reserve is not looking to do that just yet. What happens if the Federal Reserve cuts rates?
So the comparison with the ECB is one that's very important. And the nature of the economic implications of tariffs for the United States is more stagflationary, as I described. Higher prices and inflation, lower GDP and growth. But for Europe, the implications of these tariffs, it's disinflationary.
Oh, I'm sorry. I mean the implications for the dollar if we were to cut rates.
So if we were to cut rates at this stage, I think it would reinforce the weakening of the dollar. Now, the ECB is cutting as well, so maybe there's a little bit of an offset there. But again, it's about fostering confidence in U.S. policy. And to the extent that we undercut that, then that risk premium that I described is going to be higher.
Would you think, what's the probability that Donald Trump would renominate or nominate again Jay Powell for another term? Is it 0 or greater than 0? He's done a pretty good job.
So he nominated him once, right?
The first time.
Powell in place. He was nominated by Donald Trump. I would say it's not identically 0, but it's low. And I think the argument, suppose he is cutting rates by the fall.
That's what I mean.
Trump's happy with that.
There's a lot of hawks. I mean, the devil you know. I mean, I'm thinking about the names that are bandied about for Trump to replace him. He may be, I can't imagine that would happen, but who would you suggest to him?
It's easier for him to blame Jay Powell if things go wrong, even if they've been renominated. So I think the others on the list that I've seen, Kevin Hassett, Scott Bessent, and Kevin Warch seem to be the three names. Maybe Chris Waller at the Fed. Those are the key names that I've seen. And candidly, I think all of them would be credible Fed chairs that would understand the value of central bank independence.
They don't sound like they're just going to do everything he says and cut rates no matter what. But that's a tough guy to find. Who wants you don't want a Montgomery Burns. Oh, no, that's the Simpson guy. What's the other guy's name? Arthur. Okay, Nathan.
Arthur Burns.
Arthur Burns. Not Montgomery Burns.
Yeah. G. William Miller.
Release the hounds. Nathan.
You do that so well.
I do. I'm pretty good at that. I can do Smithers, too.
Coming up next, a lot more on Squawk. We're going to talk crypto because it is now above 90,000 on Bitcoin for the first time since March. We're going to hear from the head of institutional strategy at Coinbase about that move and the recent belief that digital currencies are decoupling from tech stocks. Squawk Box returns after this.
We are well known as a cultural Andean destinations, but we also would like to be known as other destinations like jungle destination and coast destinations. It's a great place and we need to promote that and let the people know about that.
We are one of the most visited destinations in the world. So our biggest challenge is how to distribute all those international visitors across our country. What we want is for them to discover our beautiful country, northeast, south and west, the center of the country. This is what we are really working on.
Seasonality is a great challenge for us in Andalusia because actually it's a well-known destination in the world about, beach, summer destination, but no one knows about Andalusia as a real cultural destination. It's a great place for coming all over the year.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
If you're really ambitious, you don't think about the end goal. You're too busy thinking about the process of getting there and the growth that you need to achieve. And nothing can beat that.
Health and Human Services Secretary Robert F. Kennedy Jr. says that the government will phase out all artificial dyes from the U.S. food supply by the end of next year. The FDA will give the food industry about 2 years to transition from using petroleum-based synthetic dyes to natural alternatives. The chemicals that are used in thousands of products, including candy, breakfast cereals, and soda, Kennedy has claimed that those artificial dyes are responsible for behavioral problems in children. The FDA has not established such a link, but it is monitoring for one, and that it's where it could get a little more complicated. Really, what they're doing is starting a process to ban 2 dyes that most in the industry no longer use. That rulemaking is very important if they want to have the teeth, the legal teeth, to go along with some of these things. What you're going to see in the meantime is an effort to voluntarily get the food industry to go along with some of these things, and we'll see how successful.
I didn't realize what's dyed. I think it's easier to find things that
I'd love to get some of these
dyed.
dyes out.
I mean, I think carrots when they're nice and orange, I don't think that's...
Beets are...
They don't look like that.
Oh, you mean effectively
if you didn't... I think blueberries are not a beautiful blue unless...
I picked them in the wild, and they are.
Are they?
Yeah.
There's certain things. I mean, it's not just M&Ms.
No, but there are some things in the wild. You're right. They do at times artificially change the color on.
Would you eat it if it didn't have pretty color?
I'd prefer to have it without the pretty color. Now, again, though, this is a voluntary measure at this point. It's a very difficult process to get the rulemaking in, and you have to have science that backs it up. And the study that's out there today, I think that Dr. Marty McCary from the FDA has been citing, probably will not be enough. They're going to have to do much more work to actually get this to be something that is not going to be anything more than voluntary.
Were you around for red dye number 2? Do you remember that?
I don't remember what it was in.
I think it was maraschino cherries and things like that. This had to be 40 years ago.
Skittles are supposed to be awful.
30 or 40 years ago.
Colors that go in. But again, we'll see what happens. It would be nice to get rid of some of these dyes, but we'll see how the industry moves along with that.
Let's see when this was banned. But go ahead, sorry.
We're going to talk Bitcoin. Take a look at where things stand right now. We want to talk about what's driving this, because we're back up at 96, almost 90, or 93, almost $94,000. This, of course, we're down at 76,000 was maybe the recent low. I don't know.
76.5, yeah.
76.5. John D'Agostino is here. He's the head of strategy at Coinbase Institutional. Tell us what's going on in terms of the coupling, decoupling. I don't really know, because there's periods of time where it feels very coupled, then it feels uncoupled, then it feels like it's coupled up again.
Right. Well, first of all, thanks for having me. It's great to be back on. So when we talk about decoupling, we're really talking about neutral to negative correlation. And more specifically, we're talking about negative correlation when markets panic and on the downside. Nobody minds correlation when it's upside correlation. So, first and foremost, got to be super careful, right? This is a relatively short-term data set, April. You don't want to assume it's going to persist. I could be making a fool of myself right now, and today it could jump to a 1 correlation. The other thing you want to be careful about is, even if we understood exactly the reasons, and I'll get into what we think they are, just because this occurred now, it doesn't mean if that similar set of events occurred, we'd have exactly the same behavior. So just a disclaimer, be very, very careful. And that applies to gold. That applies to any asset. So the nice thing about my position is I don't have to guess as to what traders are thinking. We're kind of the center of the crypto ecosystem. So when you called me, I made a bunch of calls. And the pools of capital that have been buying during April, sovereign wealth funds, large institutional, long-term duration pools of capital, they're looking at it basically 3 ways. One is, if you think about the tariff announcement April 2nd, if you believe that that's going to have a spillover effect on global trade, you believe there's going to be less global trade, then much of which is denominated in U.S. dollars, then you think there'll be lower demand for U.S. dollars, that we refer to as de-dollarization. Well, some of the ways Bitcoin is used by these large pools of capital is they buy it in their local fiat currency, they hold it, and they sell it into dollars when they need it. Right. Well, if you think dollar is going to weaken, then you don't do that anymore. And so you're holding more Bitcoin, and these, again, large insurance pools, sovereigns, et cetera. So that's one thing, is this de-dollarization trade. The second piece is that post-COVID, Bitcoin kind of got caught up in this levered tech trade, kind of just bundled into the QQQ, bundled into NVIDIA. It's not really a tech stock, but it kind of got associated with tech stocks.
Was it? I always thought that the issue was that there were retail investors who were taking their winnings, in some cases, from an NVIDIA or a Apple or Meta, whatever, one of the Mag 7, and then moving it into Bitcoin. And therefore, then it was all tracking because to the extent that then they owned that other stuff too. Right. Whenever it went down, they had to sell out of stuff. They also were selling out of Bitcoin.
During the bubbly periods in tech stocks, that's not an unfair assumption, but I'll note one thing. So for the month of April, as you would expect, gold ETF inflows were massive. I think $8.5 billion roughly from the 2nd through the 22nd. Okay. Might surprise you to learn that Bitcoin ETF flows were net negative to the tune of about 470 million. So the opposite of that was occurring. So institutions, sovereigns, patient pools of capital were piling in during April, which resulted in about a 13% increase in Bitcoin versus 10.5 for gold. And retail via the ETF were exiting. So you got to kind of ask yourself, what do the institutions know?
Were the institutions buying Bitcoin direct? And how many of them are now buying via ETFs or other forms?
Well, hard to say. They don't, especially the sovereign wealth funds don't report.
Right, no, but you're also, I imagine, seeing the ETFs buying. Because the ETF should be buying on a
in the last couple of days.
But the ETF should be buying on a relative basis on behalf of their customer base.
Right, assuming there were inflows, right? But the last couple of days, yes, we've had inflows. But still, as of yesterday, it could change today, we've had net negative ETF inflows. So. So the first reason is de-dollarization. The second reason is this tech unwinding of this big levered tech trade and Bitcoin trading on its core characteristics, which again are similar to gold. You've got scarcity, immutability, non-sovereign asset, portability. Right. So trading the way people who believe in Bitcoin would like it to trade. The last was, to me, the most interesting, which is I spoke to a couple of traders who said, look, if you believe these conditions, these de-dollarization conditions are going to persist, you're looking at gold, obviously, first and foremost, but maybe you missed out on that trade. You're looking at that rally and saying, I missed the boat on that. So what other assets could participate in that market panic long-term inflation hedge? When you do the work, there's a very short list of assets that mirror the characteristics of gold. Bitcoin is on that short list. In addition to the 4 characteristics I mentioned, its mining scarcity, its mining difficulty gets harder over time.
Yeah, and you can add 2 or 3 more good things about Bitcoin that you didn't even mention. So, I mean, maybe it never is used to wire money or whatever you want to call it over to the Far East or something, but you certainly can do it instantaneously, frictionless, right?
And you can do it overnight.
And you don't have to, in gold, I mean, you better, it's heavy, you better store it, you better insure it. I mean, there's a lot of things.
Portability is an under-looked at, it's under-emphasized skill asset. It's very, very hard to transport large amounts of cash. It's very, very hard to transport large amounts of gold.
Right.
You can't put $400 million of gold on a small disk drive, tuck it under your arm, and move if you need to.
Right. Someone said after gold moves, if Bitcoin starts moving, it'll move a lot more. Do you believe that?
So look, again, if you buy into this notion, and I know a couple of some of the best commodity traders in the world, and 5-6 years ago, they thought inflation was going to persist and be an issue. And there's no perfect inflation hedge. We all know that. Nothing's perfect. So they created a basket. So they looked at hundreds of different assets and said, what's the best possible basket of commodities, real estate holdings, U.S. Treasuries? What does that look like over the next 10 years to be the better inflation hedge just holding a single asset? In every single one of their analysis, Bitcoin was top 5. So again, nothing's perfect. But as a basket for protecting its market panic and inflation hedge, Bitcoin and gold go side by side.
We're out of time. I could talk to him forever. I know. John, thank you.
Thank you.
Come on back. We're going to continue this.
Love to.
Okay. Thanks.
Beta carotene. So they're orange carrots because they have beta. But did you know they come in white, yellow, red, and purple?
Yeah, you can buy the colored ones. I like them.
You knew that?
Mm-hmm. They look really nice
Blueberries
with, like,
are indeed blue, but they have something on
For
the
those who
outside.
are missing the segue, earlier in the broadcast, we were
2 minutes
talking
ago.
about
It was 2 minutes ago.
various food dyes.
What, you saying that they left and new people came in? And
I'm just suggesting some people might have just joined the conversation.
I think
They
you're
don't
rambling.
Okay, can I tell you
understand
one
what's
more
going on.
thing?
Yeah.
It's a smarty pit. Red dye number 2,
Oh, I looked that up.
1976.
Yeah, I looked that up.
Brilliant red for lipstick.
I'm just trying to help the
I think
audience.
there
Trying to
are
help
some
you.
reds that
Trying to help
are
you.
like insects crushed up and things that are.
Okay. You knew what we were. You
Absolutely.
Thank you.
Well, he was here.
He was here.
Yeah, they were like beetles,
You happen to
right?
be
Like,
here.
it was
Yeah.
like chopped
I
up, right?
assume our viewers
Yeah,
are,
I know that too.
are with us for 3
Do you
hours.
really want to eat like a pale apple?
Yeah, I would. I mean, I wouldn't mind it if I knew it was like completely natural. But I guess we've been trained. Our eyes have been
A little more
trained to
shallow
think
than
these
you
things.
think.
How would you pick out which gummy is your favorite if they were all just a bland?
Life's a mystery. Life is like a box of chocolates.
All right.
Or
You
a
never
bag
know
of gummy
what
bears.
you're going to get.
Up
Turkey,
next,
chili.
street reaction to Boeing's quarterly results. We'll be right back.
CNBC. Live ambitiously.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
CNBC has the most affluent audience in television, and my job is to tell viewers how the wealthy make it, spend it, and give it away. I grew up in upstate New York. Both my parents were artists, so we didn't have money, but they taught me to appreciate beauty and also see things a little bit differently. For a lot of people, their ambition is to get wealthy, but money itself doesn't have any meaning. It's how you make it and what you do with it that gives it purpose.
Live from the New York Stock Exchange, Halftime Report, CNBC.
For more on these results, we want to bring in David Strauss. He's Barclays senior research analyst covering the U.S. aerospace and defense industry. And what do you think? This is obviously some good reaction from the street. What stands out the most to you, David?
Yeah, definitely a step in the right direction. The main thing is that the cash progression was better than expected. The company had forecast about a $4 billion cash usage back on their Q4 call in late January, and it came in closer to a $2 billion burn. So obviously, the cash progression, eventually getting to cash positive is the most important thing for Boeing. So that's really what stood out.
Obviously, they have been front and center in the trade wars, with China saying that they will no longer be taking delivery of Boeing planes. Here's what the comments are from the CEO on this. While we are closely watching developments in global trade, our strong start to the year, demand for airplanes, and $500 billion backlog for our products and services gives us the flexibility we need to navigate this environment. Where do you come down on how the trade wars will impact this company?
Yeah, specifically with regard to China today is about 3% of Boeing's backlog. So it's a much smaller component of the backlog than it used to be. So I think with respect to China, it's fairly manageable. If ultimately there are retaliatory tariffs and 80% roughly of Boeing's airplanes are exported to the rest of the world, that would be certainly more problematic. But specifically with China, I think it's pretty manageable just given the small size that they are today within Boeing's backlog.
They say they're still anticipating the first delivery of 777-9 in 2026. How important is that? How important is it to make sure that they are meeting the expectations for deliveries beyond that?
777X is really important. Today, they're building airplanes in anticipation of getting certification and delivering that in 2026. So they're burning a lot of cash on that, probably somewhere in the order of $4 to $5 billion in cash this year because they're building and not delivering. So in terms of the things that are most important to the cash progression here from where we are today, certainly MAX deliveries continuing to ramp up. We're at around 100 deliveries per quarter right now. There's certainly a lot of room to go up there. But I would put next on the list really 777X, getting that certified and starting to deliver, just given the cash burn associated with producing but not delivering any of those airplanes yet.
David, what's your rating and your price target on the stock?
Sure, I'm at an overweight, $210 price target. We had been equal weight on Boeing up until early this year. We turned positive early back in January, really with regard to a couple things. The first, they raised equity. The cash that brought in took kind of the balance sheet from being an issue over the near term. That was number one. And then second of all, progression on free cash flow. We were more optimistic there, and certainly the change in management and our confidence in Kelly Ortberg moving things in the right direction.
All right, David, thank you.
Thank you.
By the way, folks, a programming note for you. Boeing CEO Kelly Ortberg will be on Squawk on the Street. That's coming up in just a few minutes.
And software giant SAP shares rising overnight. The company reported a 58% jump in first quarter operating profit, and revenue rose 11% to 9 billion euros. The company confirmed its outlook for full year cloud revenue as well. Last month, SAP overtook Novo Nordisk to become Europe's most valuable public company. And you know why Novo Nordisk is up there, because of which one is theirs? It's Lindaro or
Wegovy or
Wegovy.
I forget which one it is.
Yeah.
I think they're Wegovy, but I'm not sure.
Wegovy. Okay.
Ozempic. Sorry.
Ozempic
face.
Ozempic.
Ozempic. Final check on the markets this morning. Now 800 points. So that would be 1,800 points in 2 days if that were to hold after a down day of 950 on Monday. I guess get used to it. The NASDAQ indicated sharply higher, up 580 points, and the S&P doesn't put it out of correction mode. What's wrong?
Natural dye.
Yeah.
Cochineal beetles. That's how they make the natural red dyes.
We're going to be eating bugs. Anyway,
more protein,
they say, and ants supposedly are pretty good. We were going to look at oil, which I think all these things move in tandem. That's rebounded a little bit. Gold down.
Gold was down, yeah.
Gold down in the session. Bitcoin up.
Dollar was up.
Make sure you join us tomorrow. Squad on the Street is up.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stocks continue to soar as the president on Tuesday says he won't try to fire the Fed chief and sees de-escalation with China, saying we're going to be very nice and they're going to be very nice. Gold plunges more than $100, 10-year below 4.3. Our roadmap begins with the Street's reaction as the president appears to soften that stance on Powell and China.
Plus, Tesla has a big earnings miss and a slew of price target cuts, but the stock's rallying ahead of the open. This after CEO Elon Musk said his time at Doge is going to drop significantly beginning next month. And Boeing shares, you just saw them as well on Squawk Box. They're on the rise. Better than expected Q1 results. CEO Kelly Ortberg is going to join us in just a few minutes.
Let's begin with the markets poised to extend their rebound rally. Among the catalysts, of course, the comments by the president yesterday about the Fed chair. Take a listen.
I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. She could have taken place earlier. But no, I have no intention to fire him.
Jim, what do you think accounts for that change of rhetoric?
Well, I think that if you go back to Monday's stock market, that was one of the worst days in my career that I've ever seen. You had that comparisons to 1932. You had a lot of people just say, look, let's just forget about this. Let's turn it off. I don't want to be in this anymore. David, there seemed to me on Monday to be a belief that we're really on our own, doing whatever we want, tariff away. We don't need anybody. Interest rates going the wrong way. Gold going the wrong way. It was just a hideous day.
Although I'm surprised to hear you say it was one of the worst in your career.
Well,
You've had
yes.
a long career, not just in
because in terms of despair,
but in
despair.
Level of despair, not necessarily what we saw in the market.
Oh, no, because we've got a lot of...
Right.
I'm just saying the level of despair on Monday when I left.
But we pointed that out yesterday. In fact, how negative everybody was
right.
Exactly what we discussed here at 9:01 yesterday.
Everyone said bear market rally yesterday. Well, those people have been pants. There was a guy on this morning was talking about tariffs. He said, I was really hammered. I said, geez, it's early in the morning.
But to your point, there were desk notes Monday night saying it's so quiet.
Yeah.
And we can see panic buying, but this is not, or panic selling. This is not panic selling. I think J.P. Morgan called it a wholesale divorce from dollar-denominated assets.
Yeah, I felt like that I could go very easily into pretty much any market in the world and be better than ours.
And so, getting back to it, you think the president has that in mind when he says,
yes,
by the way,
I do.
When he says, I'm not going to fire him or have no intention of doing so. A week ago this time, it was not a subject we were discussing.
No.
So he only introduced it as a possibility, really in a significant way, last Thursday, I believe it was, only to now take it back on Tuesday, and here we are. And then we're up as well, I guess, on the prospect of a potential deal with China, even though there's no talks with China.
And treasuries are back where they should be. I also think that
it's just the hopes that there's going to be a de-escalation.
I think that Besson, Treasury Secretary Besson, is regarded as being a smooth at the tiller right now, and
that's a positive.
He understands the stock market, and then there's Navarro, who understands death by China.
Besson has a call today, I believe.
He does. He'll speak at IIF at 10 a.m. Yes.
Yeah. Wow.
And he's the axe to your point. Yeah.
Oh,
right
yeah.
now.
I mean, look, the guy obviously just knows that there is some connection between the stock market and the country. And I know that the president first go around regarded it as being really important. The second go around, I think he's just said basically it's an abstraction. Even to the point where I can do tariffs higher than Smoot-Hawley and not care what happens.
Although maybe, I don't know, I had one conversation with somebody this morning. He seems to be keeping track of the S&P between 5,000 and 5,500.
No, I like that.
Either side of that, he doesn't care.
I like that. Didn't want to get back to 4,800. Right? But, now he's faced with a potential double top if we don't go higher.
Well, we need a 4% gain to get back to Liberation Day close.
Can we get Liberation?
You think we get there?
I think we can because we've got Besson throwing a little fuel on the Kingsfords, and I really feel that let's use Tesla as a good example. Like Tesla, you knew the moment that he was on the call and saying, "Listen, I'm going to really get out and Dodge." Suddenly you realize, which is Doge. I bet that was funny.
I like that. That was cute.
Yeah. That it's like, okay, this could be up 30. Right. It's like yesterday I said McDonald's was up $1. This could be up 10. Once you start rolling in this market, you'll what?
Right. No, you're right. Listen, everybody's very negative. Nets are very compressed. Everybody's scared to miss the big rally. But the question is this a fake out? I mean, the fact is, what has really changed? Again, a week ago, we weren't really considering the possibility that Powell would be dismissed somehow. Now we're also saying, okay, we can put that fear to the side. And we haven't really made any progress with China as of yet. We may see some...
We may see a deal.
Even if you're Japan, can you imagine the leverage Japan has right now? You want a deal now?
Yeah, we're going to speak to Kelly Ortberg soon from Boeing. He holds the key. I mean, let's say if he just says, I've got plenty of orders for the Chinese planes, don't worry about it. And then you get into this thing. You get into this mojo moment, David, if I can use a technical term, where there are countries that just say, I got to get this president off my back. I'll take 5 777s. And other guys, I'll take 6 787s. I mean, that's how you get your trade balance.
I see. Right, just buy a lot of planes you don't need.
Right. Well, there's a queue. I mean, you're not going to get one until the end of the decade anyway.
You're not going to see them for another 10 years.
Right, but it counts. Right? It's a Navarro account, right? Isn't it like a Navarro? He's got like the 1, 2, 3. There's a cross off.
I can imagine. It's difficult. It's just a difficult market to navigate effectively.
Well, yesterday,
and a lot of it comes down to what we're saying here, which is he, and there's only one he.
Well, yeah.
And it's whatever he does and says.
Well, yeah, but I would say that when I listened to everybody yesterday, all the different traders, bear market rally, the bear is going to rip their face off. If you see a grizzly in Yellowstone National Park, you're supposed to call.
Do you think we're in the beginning of a new bull?
No, we're in a rip your face off moment, though.
A lot of discussion about Boeing today, up sharply in the pre-market after this much narrower than expected quarterly loss and a revenue beat. Our Phil LeBeau is in Charleston, South Carolina this morning with Kelly Ortberg. Morning, Phil.
Good morning, Carl. Kelly, it's great to be here in the plant that builds the 787 Dreamliner. Carl set us up there perfectly by talking about much better than expected results for the first quarter, and in particular, free cash flow. Are you still on target for positive free cash flow in the second half of this year?
Yeah, we sure are. We did get off to a little bit better start here than we anticipated, particularly in our commercial deliveries. We delivered 130 airplanes, which is ahead of our plans. So as you saw, a little less cash burn this first quarter. So we're well on track for that recovery to return to positive cash flow in the second half of the year.
You're taking back some planes that were supposed to be going to China. They were ordered by Chinese airlines. And you've got a number that are either in production or in the order book. How many will you take back, and what do you do with the ones that are starting production but they're not yet ready to be delivered?
Yeah, Phil, we have 3 airplanes that we had in China ready for delivery. I think we've got 2 of those already back, and we're bringing the 3rd airplane back. They have, in fact, stopped taking delivery of aircraft due to the tariff environment. We have roughly 50 airplanes in our plan this year going into China, so we're going to be pretty pragmatic with what we do here. For those airplanes that haven't been built yet, we'll be looking to maybe redirect those to other customers. For the airplanes that have been built, we call it remarketing. There's plenty of customers out there who are looking for the MAX aircraft.
How long do you wait?
Well, we're working with our customers right now. We're not going to wait too long. I'm not going to let this derail the recovery of our company. So we'll give the customers an opportunity. If they want to take the airplanes, that's what we'd prefer to do. But if not, we're going to remarket those airplanes to people who want them.
Kelly, Jim has a question for you. Jim, go ahead.
Thank you, guys. Hey, Kelly, I was very worried, as you know, about the free cash flow situation. It looked pretty grim. To hear any progress along that front would make me feel like that this is the right stock to own. Where are you?
So, Jim, we're in great shape. You know, we had the big capital raise at the end of last year, brought in $24 billion. Our cash balance is better than we anticipated, and really it's all around the MAX production rate. We're producing MAXes at about 31 a month right now, low 30s. We will be ramping up here over the next few months and get to a 38 a month rate. We're capped there with the FAA, but we have a plan to move beyond that yet this year. So I feel pretty comfortable with the overall balance sheet, and recognize that we just made a divestiture, announced a divestiture of some of our digital business for $10.5 billion, which will also solidify our balance sheet going forward.
All right, and could you talk about the cadence of what you would have? I mean, because I think that I had thought that things could, if everything went right, you would get a few more each year. That's not correct. It's more each quarter, correct?
I'm sorry.
In terms of MAX production, it's not just 1 or 2 increase a quarter. It's a sizable increase when you start ramping up.
Yeah, that's right, Jim. We will increase at 5 airplanes a month when we go through rate increases. So the first one will be 38 to 42. The next rate increase, likely about 6 months after the first rate increase, will be from 42 to 47, and we want to be in the mid-50s when we get production stabilized.
In terms of the tariffs, so much is focused on the fact that you are the largest exporter of anything in this country, in terms of value, certainly. And then the question becomes the tariffs that are being put in place, whether it's USMCA related here in North America or foreign production, like you get the wings for the Dreamliner from Japan. Right. How much is this impacting the cost? If this goes on for the rest of this year, Will you be able to bear the impact cost-wise?
Yeah, we think we'll be able to manage this within our cash flow plan, and it won't deteriorate from that. Recognize that there are drawbacks on some of the tariffs. So the tariffs we're paying, for example, in Japan and Italy, for those airplanes that we deliver outside of the U.S., we're able to draw that back. And 80% of our aircraft right now are going outside of the U.S. So we think we'll be able to manage through the input tariff environment. The bigger issue is making sure that our supply chain stays healthy and we continue to see the supply chain making the deliveries, and the tariff environment doesn't slow things down in the supply chain. We haven't seen that yet, but we're really watching.
And that's a possibility, that somebody farther down the line says, I can't pay this.
Right.
And if they don't produce, then you can't produce, right?
Yeah, and that's more a continuity of supply issue than it is the actual 10% tariff. So one of the things we're doing is working with our suppliers to see if we can't help them also with this tariff drawback environment, and maybe utilize our drawback ability to help them also get recovery.
777X, what's your outlook in terms of, as you look at the progress you're making there, when do you expect that you get the certification and you can say, okay, we start to move towards production here and deliveries?
Well, the short answer is the end of the year, but the airplane program's marching along. We're in flight tests right now. The airplanes are flying every day. No new issues on the 777 flight test program. So we've got a lot of work to do with the FAA to get through the cert, and we want to get that done here by the end of this year so that we can start delivering those airplanes.
And with regard to Starliner, more missions?
Yeah, more missions on Starliner. We're working with NASA to make the corrective actions from the thruster issues that we saw in the last flight. It's pretty straightforward engineering work. We know what the problems were, and we're making corrective actions. So we'll hope to do a few more flights here, in the coming year.
You're confident you've licked the problems there?
Yeah, we are. It's pretty straightforward. I think we know what the issues are, and I think we have straightforward engineering solutions to those issues.
Kelly, thank you.
Hey, thanks, Jim.
Hey, guys, I'm going to send it back to you.
Phil, appreciate it. Busy man this week, our Phil LeBeau. Jim, your thoughts coming out of that?
Very important company for America. Very important stock. I was concerned that there would not be a turn in cash flow, but they took in the 10 billion. Their cash flow is getting better. We hear that they're going to be delivering a lot of planes. The fact that they have customers for China, can we take that off the table? Although obviously there'll be a little glitch in terms of the timing issue. But Boeing could be back, so to speak. And if that is, it's a beginning of a couple of companies that are back. I feel that 3M the other day is back. They've got that company together. If Boeing gets back, I've seen, obviously, all the pieces of GE very strong. If RTX could get back on track, these companies have all kind of said, you know what, we're not hurt that much by tariffs. We're doing pretty well. And then you start getting an narrative which says maybe no recession.
Where are we on the Chinese buying Boeing, though?
Buying planes?
Yeah.
You just said, look, if they cancel, fine. We got other guys who want them.
It's not going to be a problem.
No.
But hasn't that represented an important area of demand over the last decade?
No, but he said they've got others that want to do it, but you have to do a switch around. You can't just say Southwest.
They're highly customized models.
Right. But he obviously has tremendous demand. I think that a lot of lies were just dispelled about Boeing.
Those are three big cyclical names you just mentioned, Jim. That would be a narrative shift. When we come back, we'll get all things Tesla, including the comments by Elon Musk that are boosting the stock today. So many movers to get to. Apple, Meta, Vertiv, SAP, Oklo, Intel, AT&T in a minute.
This is the game changer seat. Look, it even comes with binoculars.
Watch the markets open. Brought to you by Emirates.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
My side hustle brings in over 6 figures.
About $10,000 a month.
Over $500,000 since its beginning.
Find your hustle with CNBC Make It's new online course, How to Start a Side Hustle. 3 industry experts break down proven paths to success.
There's a tremendous amount of opportunity out there.
And help you choose the one that fits your life, schedule, and goals.
Find your own path to building multiple income streams.
Go to cnbcmakeit.com/side hustle to register now.
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
Starting probably in next month, in May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back, which we'll do if it has the chance. So I think I'll continue to spend, a day or two per week on government matters for as long as the president would like me to do so, and as long as it is useful. But starting next month, I'll be allocating far more of my time to Tesla.
Fair amount of price target trimming today, guys, but
Yes.
there still is the promise of Austin in June.
You mean with the cyber cab? Yep. Yeah. No shortage of, as you say, price target reductions. Very few, though, changing their rating. Everybody's afraid in some way because they're going to rip your face off. Guys, though, this was a horrible quarter. It was a horrible quarter.
It was a changeover quarter.
They missed on every single metric other than, guys are finding things that they can try and say, well, they beat on once you back out this and that.
Are you done?
And there really was brand damage, without a doubt. What are you making a face for? Show his face. What is this? Do you need something in life? What's the problem?
They're talking about having a million robots. They're talking about how they're much better than Waymo in Austin.
Yes, and they have talked about this many times, and there are believers without a doubt, and it may well happen. And yes, we've talked about that. The future of the company, as Musk has said numerous times for the last 2 years, don't focus on my sales of automobiles. Focus on what I'm going to do in automation, or I should say automated automobiles, the same, essentially Cybercab, Robotaxi, and Optimus. He is known for promising prior to being able to fully deliver. He is talking about 2029 even, saying maybe certainly 30, but 29, 1 million robots a year. And certainly that's what I would assume people are buying the stock for, not to mention his return. That said, the loss of market cap in Tesla has been far larger than the cost cuts from Doge.
True. What I took away from this is that the reason why you had that really bad quarter, if you want to be simplistic about it, is he's not been focused, and they had this changeover. Now he's back, and the magic is back. So you can have all these hedge fund all the mutual fund managers who love him. They'll just sit there and take the stock, which is up 17 right now. They'll take it to 275 over the next couple of days because they love him so much, and he's not a Pied Piper. He's a serious guy.
Oh, well, there's no doubt he's a serious guy. SpaceX is still running very efficiently. He hasn't really been paying that. I just wonder what it is. By the way, he's damaged the brand, though, as a result of what
and
he
they
does.
talk about that.
Does coming back
paid negative
repair that damage? Or is it just, you know what, memories are short?
I think memories are short. I think they'll have new models. I think he talked very positively about China. He does have a tariff problem.
There's a tariff problem and a rare mineral problem on Optimus.
Yes. Getting the magnets from China, which now it's very difficult to, if not there's a ban, apparently.
Yeah, it's a halt.
I know. They need a break there. They need some sort of deal. Maybe that's something that would come up. David, I want to go back to this Waymo issue versus
Robo or Cybercab.
Yeah, I mean, he just says, look, Waymo is very expensive.
Yes.
It's not really their own car. You're going to see in Austin, you're going to see an explosion of Teslas. I think that's the next big thing that gets these managers all juiced and says, I got to buy this thing.
Listen, I talked about my experience with full self-driving. And what they're having there is true full self-driving. But I was obviously in a Tesla where basically you didn't have to touch the steering wheel at all for quite some time. Sure, that is a big deal. Right. But what's this thing trading at?
David, you keep letting the facts get in the way of the story, and it's amazing I can work for you so long, work with you as a partner.
I know.
And you still are constrained by the four walls of the spreadsheet. Carl, I find this thinking naive.
You sound like a sell-side analyst.
Well,
it's true.
Look, I happen to like Jonas more than anyone. Now, Jonas got these last questions in.
The Morgan Stanley analyst,
and it wasn't good enough. Jonas had the floor, and he could have said, welcome back.
Tesla's first quarter core auto gross margin and operating margins rank amongst the lowest of all OEMs in the global auto industry. That's from Jonas's note.
Yeah, and without the regulatory credits, you would have had an operating loss.
Right.
Yep.
That's somewhat negative. What I think matters is that David, he doesn't understand. See, this is a magic.
I do understand
You think it's alchemy. I say it's magic.
I do understand it. I leave that to you to determine where the stock may go. I'm just simply pointing out, as you say, the fact is it was a horrible quarter.
Well,
there was true brand damage, but investors, as we have said numerous times, are not focused on that. They're focused on the promise of Optimus.
And how about the number of cars that can come off the assembly line and how much more fast they can.
And what AI is going to do for this company overall, without a doubt.
And he said you can eat lunch. Well, you'll be eating lunch.
You can eat lunch in the car.
Yes,
in the car.
And eventually go to sleep.
You can text to your heart's desire.
Take a nice nap, right? As opposed to now where you basically have to keep your hands there.
I think we do our show from Austin and we show David that the magic is back. Because I think that he's hung up on something. I don't really know. You spend time with the man. I'm surprised that you didn't come back with him.
I would love to see him again, spend more time with him, keep working on it. Somehow I'm not getting to that promised land of another interview.
I don't know. But I wish you did because
I wish I did
what
too.
A story. What a story.
What a story.
Meantime, we'll get Kramer's Mad Dash countdown to the opening bell. We got to get to Vertiv. I know Jim wants to talk some data center.
Yes.
Up 18 pre-market as futures are close to session highs.
CNBC. Live ambitiously.
I just took a shower above the clouds. You know why? Because this is the Emirates A380.
Watch the markets open. Brought to you by Emirates.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. There is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
Vernova.
Yeah.
And I got Vertiv on tonight.
You got who? The CEO or Dave?
Yeah, the CEO. The CEO.
CEO.
You know, Dave's the chair.
Yeah.
And I just want to say that there's been a lot of what I regard as misinformation about the data center slowing. And both, when you read the Vertiv notes, forget it, business is on fire. When you speak to Scott Strazik, who's the CEO of GE Vernova, he would tell you that the hyperscalers like to play. Like they put some here, they want to put there, they talk about doing this, talk about that, but in the end the orders are up. Right. And that anyone who thinks that the hyperscalers are scaling back, frankly, is just, again,
well, all right,
not
but
telling
what was
the
the conversation then? When I said Microsoft to you, you've been like, yeah, they're cutting back.
No, I told you that they're jamming their CapEx, I believe, on OpenAI. That's what I was saying.
Well, OpenAI and Microsoft are not the same company.
No, I know, but if you talk to CoreWeave, I think you get a sense that, wait a second.
OpenAI is spending on anything they possibly can.
Right,
they need more capacity.
Right,
Sam Altman has said that.
I know, and by the way,
you got it, we'll buy it.
Right, well, it sounds like Boeing. No, I'm just saying that if you listen to Microsoft, you think, you know what, there's too many data centers being built. The Amazon Web Services yesterday, they don't need all the data centers. What Scott is saying from GE Vernova is that's the game they play. They're trying to build it here, they're trying to build it there. They're not going to let each other know. It's a little bit more secretive. But he said, I'm the keeper of the order book, and the order book is fabulous. So those who are trying to get those down, the bear race against those, they got to rethink the game plan. They got to rethink. That's all I'm saying.
Let's get the opening bell and the CNBC real-time exchange of the big board. It's Elm Wealth celebrating the Elm Market Navigator ETF at the NASDAQ. It's Rec Shares specializing in alternative strategy ETFs. Jim, Goldman Desk says the squeeze risk is real and thinks we could elevate even further from the pre-market today.
Well, look, I think that we have a lot of situations today that are going the way of the market, but they're not the ones you think. Amazon, the other day, I was reading a downgrade by Ray J. Well, you know what? The downgrade got a lot of people out of it. Meta, we know that Meta had this fine. People seem to care about it. A lot of people were talking about Meta's losing because of Chinese ads. Well, forget that. Nobody seems to care about it today. Apple, we think that they're going to miss the quarter. We had 3 notes today saying, listen, it's a possibility they make the quarter. So, David,
they very well make the quarter at Apple in part because of the pull forward.
Pull forward.
The pull forward. And I think we're going to be sitting here in the second half. And that'll be the real question. How much is? But maybe, things are going to look good as the second quarter numbers.
There's a deal. They think there's a deal with China.
I know, but if you bought your phone, you bought your phone, right?
Look, I am trying to describe a situation where you could have all these stocks where people were shorting the other day, and today they're just being gaffed because there's a little story crafted for every one of them.
No doubt.
Except for Alphabet. I don't have one crafted for Alphabet.
No, you're absolutely right, and we're seeing that strength across the board here. Certainly, big cap tech benefiting.
Look, I know you follow ServiceNow very closely.
Well, yeah.
And I
follow the company.
It's up 50 points. Okay. Well, I mean, this is frankly enterprise software, which has been that's been the guts of what has been bad.
And also any contracts with the government, that's been a concern as well.
Yeah, for those.
We see that you got Bill McDermott joining you this evening.
Well, that's why it was a segue. Yeah. It was kind of just
very well done.
Naked promotion.
Yes. Naked promotion is great. You want to promote your book again?
Host of Mad Money.
How to make money in market. I immediately called Simon Schuster. I said, listen, I don't understand. We got to put Squawk on this.
Squawk on the Street. That's the name of our show. It's only been 13 years together. 14. I don't even know how many.
Reprint.
I just
maybe the second edition.
Simon and Schuster. I don't know. I mean, they know more than I do, but I've told them. I've gave them a what for.
Let's come back to Vertiv because this data center. Listen, this takes me back to those nice days when we used to spend all our time talking about the AI trade and data centers and unlimited demand for GPUs and places to house them. Vertiv, of course, take a look at the stock. That doesn't really put it in full perspective, the drop that took place. But, I mean, I guess it is there. This thing just fell off a cliff.
Yeah.
But it's coming back strongly today on earnings. Here's what they had to say in the press release on data center demand. Data center market continues to show robust momentum as evidenced by our pipeline growth, strong AI-driven demand. We continue to invest in the R&D, capacity expansion to support the growing needs of the industry. They do go on to say the tariff situation remains fluid, but they are proactively working to mitigate the impact. And they say their guidance does reflect potential impact of tariffs, at least as they exist as of right now, and assumes they continue through 2025. So your guidance adjusted EPS for the second quarter is 77 cents to 85 cents. And full year guidance is for $3.45 to $3.65. To put in perspective, to get a multiple that, I don't know, you feel comfortable with?
Well, I don't like compressed multiples, and that's what we've been getting. One of the things about compressed multiples we saw with NVIDIA is that as people think, wow, geez, it's getting really cheap at 26, at 25, 24. No, that's a belief that that things are not going to work out the way people expect. I believe in the data center, but I think that there are people who just say Vertiv's view of it is too bullish.
Too bullish. You did say, you wrote this morning that you thought by the end of the day we'd have a clearer view on data centers. Is that because of Bill?
Yeah, well, it's because I think that, yeah, she'll get everything, but I think Vertiv will tell you. I think the GE Vernova will tell you. Look, here's what I worry about with the data center. It's not like you have them saying there's even more orders, although, you know, GE Vernova said the orders are good.
Yes.
You still have this lingering idea that, well, Oracle can't possibly be spending this much, and Amazon can't be.
Downgrade today over at Piper.
I know, and I thought that downgrade showed that they're spending too much and the margins are bad, so that...
Although Oracle spend compared to the hyperscalers is nothing on that order. I mean, they're spending many billions, but and obviously they're a key in Stargate in Abilene, Texas, which is largely for OpenAI.
But I think that one could give up the ghost. I think that could trade down.
Yeah. I'm saying you're giving me a little whiplash
here. I'm saying it's too mixed. It's too mixed. It's not unbelievably great like it was.
Like it was 6 months ago.
Right. It's mixed.
Where nobody had any questions.
Right. So now it's like, well, you know what? I think I can buy NVIDIA off that. I think I can buy Cummins off that. But no one's going in and saying, you know what? I need to buy these.
Right.
No one feels like they need to have them anymore.
Right.
And that's what's a shame, because it's very difficult to mount the kind of rally you need when...
Well, you don't want to see these companies throw good money after bad, do you? Just for the sake of the stock?
No, I don't. I just feel like that it was like the greatest story ever told, the data center. And we had the natural gas to power them.
Well, and then Vernova, although, there had been some questions about being able to get certain things to put up the power transformers and things of that nature. Is there going to be a shortage?
Everything that was in the data center was golden, and you just had this thesis.
Yes.
And the thesis came unglued during this period, and it's a little Humpty Dumpty like. You know, it's like all the king's horses.
AI continues to move forward at a rapid pace.
Yes.
We are going to be talking more about.
Did you watch Benioff last night on the show?
I did. More about it. Yeah, of course. I watch Mad Money at least once a month. Agentics are.
Does your mother watch?
I don't know. She loves you. Of course, she watches everything you do.
Thank you. The Agentic story. Go ahead.
Is very important. What it's going to be able to do in terms of starting to really make the enterprise more efficient, I think, is going to be the key story. Back to the idea of, is this money going to be well spent by the hyperscalers to enable all of these different initiatives, so to speak, where you're going to potentially make a lot of money if you can come up with the right thing for the right company.
Well, we should play what Mark Benioff was saying, because he got Finnish Air just now. He got Bookings. Bookings, the largest travel agent. You're going to get, you're not going to get a human. You're going to get someone who knows more.
Right.
That's what I've been waiting for.
Yep.
And by the way, Elon Musk hinted something that Mark is going to introduce in the spring, which is he wants to put it in the stack, in the information technology stack of the federal government to save money. Now, we know, by the way, ServiceNow's in there, too, so I've got Bill McDermott tonight, but I don't know if we have
We do.
Mark's.
I think we do.
Maybe we ought to listen to this. Take a listen. I'd be like, what does that take a listen mean? No one ever speaks like that in real life. Take a listen, David.
Take a listen.
I'm going to tell you a funny story. I got a text from Elon Musk, and Elon Musk said, hey, I'm looking at all these government contracts. You've got a lot of products at Salesforce. I said, I know. Elon is like, I thought it was just the Sales Cloud. He's like, I said, no. Slack, yes. Tableau, yes. MuleSoft, yes. Service Cloud, yes. Marketing Cloud, yes. All of these products. He's like, why are you calling your company Salesforce? I said, I don't know, Elon. Should we call it Agentforce now? He goes, thumbs up. Yes, let's do that.
Well, let's hope that Doge puts you into
deliver that comprehensive solution.
Doge should put you into some of these places, save a fortune. You never know.
They're using us to manage their operations, so we work very closely with them.
There you go.
That was interesting.
Now, they get inside, if they got inside Medicare, if they got inside Social Security, and you didn't deal with the human because they fired, how many people they've already fired? You didn't deal with the human. Well, that's how the government can really save a lot of money. And
by the way, at all levels, New York City's got a budget of about $110 billion a year. Can you imagine that? I mean, we could probably go with some savings here,
I think if you call a doctor, you'd much rather get the agentic than like a harried...
And a harried practitioner who's arguing with insurance companies all day long to try to get something
like you
paid.
say, listen, I want to go to United Health and I want to get an MRI. And that agent would say, I'm on it, chief.
And then they can harangue United Health.
No, they can call them every 5 minutes.
Their AI agent can argue with the UNH's AI agent.
Exactly, and they can settle it by you having I don't know, what do you get? You get a half an MRI? You get the lower half?
Or maybe one controls a robot that they can send over and beat the hell out of the UNH robot.
Oh, so it's a playmaking robot?
Yeah.
All I know is that when you when you begin to get a recognition that you're getting a humanoid, I think you're going to be happy. I think you're going to be happy because the humanoid has patience, the humanoid understands you, and they have your data, and that's what's the most important. So let's say
humanoid understands you.
I don't think he's joking.
No, he's not.
The humanoid, I mean, look, when you go to
the humanoid can look you in the eye and really understand
and say, listen, I really want you to put this in my name's Jim Cramer. Right? Oh, Jim Cramer from Mad Money. How are you? Booyah. I said, fine, I'm booyah right back. And then you say, listen, I would like this done. Can you answer my question in the form of Mad Money? You say, yes, I'm very aware of the cadence you have, and I will answer it. And then I'll say, can I use it? You said, no one would know.
Right. The robot only knows you do Mad Money, of course. They aren't aware of your presence on our show.
God, you're just so centered on one thing.
I'm just thinking about the labor displacement that's going to take place, Jim. That is person that you no longer have to hire.
One of the things that Mark talked about, accountants look out. They have this 1-800 accountant, and you don't get humans, you get the answer. But come on, a human doesn't know. If you prick them, they don't bleed. If you poison them, they don't die.
By the way, they also can work 24/7.
Oh yeah, they're never tired. That's why Lennar has them.
As long as you got power for them.
You get power.
As long as you get the batteries.
Natural gas.
You do need the magnets.
Well,
need the magnets.
I think that if you want to, they had Resi, now they have all bookings. You want to book this? I mean, my wife said, why don't you book a plane to Brussels? I said, what do I know? But I could just go to my robot. My robot would talk to that robot, and man, I'm on a plane.
It knows which carrier, has your frequent flyer information, knows whether you want aisle or window.
Exactly. No, this is it.
And then it sits in the seat for you and takes the trip for you.
No, well, you can take it with you. You can take it with you if you want. I saw someone with a robot at the airport.
Like your dog. Can you get a little thing and put around your dog and say it's my service robot?
You're laughing. A year from now, David, I think when you want to go cover a story, you can stay here and you can
send my robot.
Yes.
Send my, okay.
No, I mean, people don't understand. The robot's going to have a really good face. Right now, the robot has a kind of a blank face. We're going to have a big face on the robot.
Even Elon said it's not till 29 or 30 that we're going to get the real robot revolution. So you're saying next year.
I saw it when I was at GTC. I spoke to a robot. The robot is doing the dishes. The robot's saving your marriage by putting away the forks and knives.
I can't wait for that. All right. Guys, I did want to get to AT&T, another big earnings mover this morning. Although in the pre-market, the stock was up. This was a strong quarter by many accounts with substantial subscriber additions for the company, differing, of course, from what we saw yesterday from Verizon, shares of which are down. But actually started down yesterday and then were stronger as the day went along. There's the revenue number. They're talking 2 to 3% revenue growth, reaffirming their guidance and instituting a buyback. Why? Well, they've gotten leverage down to 2.63 times EBITDA and getting lower. And so $10 billion in stock will be bought back this year and next, and then they're going to put another $10 billion in. But the stock is reversed. Now, it has been a favorite in this market, given it is largely a domestic company, even sourcing much of what it needs domestically as well. And so, as you see, the stock has had quite a nice move.
Is it too defensive for a market?
For a market like this.
Yes.
Maybe it's being sold on the other side of a basket.
I asked you too about Philip Morris today. They raised their guidance. What do you do with a name like that now?
Geez, I think Philip Morris, if they didn't sell what they sell, I mean, by the way, you know, that's the number one story of all time is the breakup of Philip Morris. It's more than all the other stocks. Yes, in the last 10 years it's NVIDIA, but the longest CAGR is Philip Morris Altria.
Interesting.
Yeah, isn't it?
On AT&T, guys, just to finish that up, as you take a look at the stock, they say they can manage the higher costs of tariffs within their guidance, so that's included. And when it comes to subsidies, and if in fact handsets do go up in price because you do eventually get some sort of tariffs, they're like, listen, we'll continue to provide. And I spoke to the CFO earlier this morning as well, subsidies, but we're not going to change them. So yeah, the consumer is going to have to potentially deal with that. Now, there was some commentary on the call where they at least talked about the business wireline EBITDA. Maybe that pressured the stock a bit. They sort of talked about a normalization, the trajectory of business wireline EBITDA during the remainder of the year. It did seem to be somewhat elevated ahead of plan, but again, perhaps it's just the trading in this market where we're seeing the I don't know, what would you call it, is back on here. I mean, risk.
Oh, I don't
want
like
to
that.
say
That's a hedge fund. I know. Forget that. Dominion. By the way, here's what I like to do. Use specific stocks. Old Dominion, the freight company, they reported a quarter and uniformly on the call they hated themselves. I told you they're self-haters. Like, oh, we screwed up on this. We're bit on that. Yeah. Stock's up 13 now, light volume. But that's the kind of, when you get a company, a trucking company that reported a quarter where they think the quarter was bad, themselves. Right. And the stock's up 13. That's a market that wants to take on a little bit more of an aggressive posture. Williams-Sonoma, last quarter good. People forgot about it. Now people are coming back to it. AppLovin, I know it's one of your favorites because you think that AppLovin is one of those companies that it's like, well, you give me a break, but they have free cash flow and
they have free cash flow.
And Billings, the CEO of Wynn
they wanted to compete. Not sure what's going on with TikTok, by the way, but they wanted to compete there.
What's going on with TikTok? What's going on with ByteDance? Bill Ford was on yesterday.
I know he was, and I don't have the answer. He didn't really share that much other than he's optimistic they will reach a deal. I would like to remind people on TikTok, interestingly, it was banned. It was a bill passed by Congress, signed by the president, and upheld by the Supreme Court, and yet it is not banned.
Well, where is the government?
Well, the president has determined it's not, but it's an example of not carrying out the law, upheld by the Supreme Court. Well, so we are waiting to see if and when this ban, this non-ban.
Well, you think that that's something that is different from other parts of our?
I just pointed out because I think sometimes we can forget with TikTok.
No, David is still a law and order guy like that.
That is one of many things people point to.
Point of order, David. Point of order.
There is a TikTok ban. It is just not being enforced.
Okay, fair enough.
Meantime, we'll get some data today. We'll get new home sales at the top of the hour. Ooh. First, though, some PMIs after we got Europe earlier this morning. Let's get to Rick Santelli. Hey, Rick.
Yes, Carl, indeed. These are S&P Global preliminary April PMIs, and they encompass, of course, the service sector as well as manufacturing. 49 expected on manufacturing. It pops above 50, 50.7, the best since February, and that now means 4 positives above 50 in expansion mode in a row. Now let's look at services. And both services and the composite, I want to point out, have had 26 consecutive reads above 50. Let's make it 27. 51.4, and that is the second lowest of the 4 in a row, but it's still 4 in a row this year above 50, 27 in a row all told above 50. And when we look at the composite, as I said, the 27th consecutive expansion at 51.2. It's a little light, just like the services was a little light to expectations, and those two are a little light in terms of sequential, but they still are pretty good reads. You're looking at interest rates on the long end and the short end moving up a bit. Maybe the most notable feature with interest rates today is what we call a bull flattening, meaning interest rates are going down. The price of treasuries across the whole curve pretty much is going up, but yet we're seeing flattening because long rates are dropping more significantly, and that is something to pay attention to. Squawk on the Street will return after a short break.
Let's just get a closer look.
Mom? Wait.
Five immersive worlds. One amazing theme park. Our universe will never be the same.
Oh, you gotta see this.
Epic Universe, only at Universal Orlando Resort.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
Amid these reports this morning that the White House is considering cutting tariffs on Chinese imports after the president's comments yesterday. And Sarah Besson in just a few moments.
Yep, also happening in D.C. this hour, guys, Treasury Secretary Scott Bessent, as you mentioned, Carl, speaking at the IIF Global Outlook Forum. That's the group of global banks. As we digest these new headlines on China, we'll bring you the headlines throughout the show from the Treasury Secretary. But I'm here today at the World Bank, which is host of meetings of finance ministers and central bankers from around the world. They usually get almost 200 of them. In just a few minutes, we'll sit down with the head of the World Bank, the boss here, Ajay Banga, and it's the perfect time to be having these conversations. Why? Well, just like you're seeing the thumbs up in the markets right now on these more market-friendly trade headlines, last night, President Trump saying we're going to be friendly in a trade deal with China. This morning, the headlines from the Journal about de-escalating these tariffs to try to sort of thaw the situation. And then Eamon Javers clarifying that that would be done in concert with China over some sort of negotiations. All of this is more toward the things are going well on the trade deals and negotiations front, which is soothing the market. But it's also giving people here a sigh of relief. Why? Because it affects everybody. What happens between the U.S. and China, what happens between these other countries and the U.S. in terms of bringing tariff rates down. So we've got the perfect guest, David, in the World Bank in order to talk about the impact that it's having on some of these developing market countries, the asset prices and what that's doing to these countries. I mean, everybody's here. Rachel Reeves, for instance, the Chancellor of the Exchequer, the Finance Minister of the UK, just getting into the U.S. She's got pressure to bring a draft deal to meet with Secretary Bessent here at the IMF. I mean, that's what's happening behind closed doors in this building. There's just this extra urgency where we're not just sitting around talking about productivity and inequality and how to, deal with AI. We're talking about getting things done, trade deals done with this White House and with this administration.
Okay, thank you, Sarah. Obviously, Sarah will be with Ajay Banga shortly. Let's get you some housing data that just crossed the tape. Rick Santelli has that for us. Rick.
Yes, Dave, these are a March read on new home sales, expecting a number a bit below 700,000 seasonally adjusted annualized units. It's stronger, 724,000, and a slight revision to last month, which puts this up over 7% for the month of March. And here's something notable. This is only the second reading that tops 700,000 seasonally adjusted annualized units in almost 2 years. Almost 2 years, because this comps all the way to May of 23. And if you recall, this morning we had Mortgage Bankers Association inform us that up till the 18th of April, the rate on a 30-year mortgage was a bit under 7% at 6.90. We all know there may be inventory issues to new home sales. This might be whittling them down a bit. And for more information regarding this number, let's head east to Diana Olick. Diana?
Well, Rick, I think there are a number of factors playing into this. First of all, people are going to talk about the weather effect. We saw sales in January and February weaker. This could be some of that making up for the January and February where we saw sales drop because of really bad weather across much of the South. And in fact, the biggest jump in new home sales in March was up 14% in the South. The West sales were actually down, Midwest, up a little bit. But it was really the South that did it. But I want to talk mortgage rates as well, because we had in March, and these are based on signed contracts, so people out shopping, making their deals on single-family homes in March. We started at 6.74% on the 30-year fixed, and it really didn't move. For the entire month of March, it was between 6.7 and 6.8%, and that was before we saw rates shoot up over 7% in April. We had none of that, with some tariff effect, maybe some uncertainty, but none of the volatility that we saw in April. So this is still March, where people are seeing slightly lower mortgage rates. They're seeing more supply on the market. In fact, we saw supply come down from 8.9-month supply to 8.2-month. And we did see prices come down 7.5% to $403,600. So prices pulling back, mortgage rates either, maybe some affordability and getting ahead of that spring market. But again, it was a nice beat. David?
Okay, Diana, thank you. Diana Olick. Well, we're keeping an eye on shares of Tesla, of course. They are rallying today, despite what was a not particularly strong quarter when it came at least to hitting analyst estimates for whether it's revenues or the company's bottom line. Phil LeBeau's here. He's got more on what is sending those shares higher today. Phil.
It's the optimism that some of the benchmarks that were set out there, David, by Tesla yesterday and during the conference call, that they will hit those. And let's talk about that roadmap. Now, these are not huge benchmarks that are out there, but they are important ones, the most notable being that a lower-priced model will start production in the second quarter. When we see it actually go on sale, what it looks like pricing, that remains to be seen. The robo-taxi rollout is scheduled for June. Let's be clear. We're not talking about the cyber cab. We're talking about fully self-driving Model Ys in Austin, Texas in small numbers. That'll start in June. And Tesla said yesterday that its guidance for all of 25, they're going to pull it for now. They'll update when they give their update on the second quarter. And we should make it clear. Most analysts believe when you look at full year deliveries, they are likely to be considerably lower than what they were last year. Remember, in the first quarter, deliveries were down 13%. A number of analysts are forecasting deliveries for the full year to be down 10% compared to last year. Again, we'll get an update in the second quarter. And the most newsworthy headline to come out of the conference call yesterday was right off the top when Elon Musk talked about pivoting back towards Tesla and away from his duties with the Trump administration. Here's what he had to say.
Starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency has done.
One more note from Tesla's call yesterday. The company said it does have enough cash on hand to fund the products that are on its agenda in terms of whether it's the new lower priced model or future products that they are planning on building. So no capital raise, guys, which has been speculated by some analysts as a possibility. At least for now, Tesla says no need to raise capital.
Yeah. Phil, investors obviously also seem to be focused, it would seem, on the prospects for Optimus, their humanoid robot, and the significant production that Musk talked about, perhaps as soon as 2029, and of course the Cybercab / robo-taxi as well. Did we get updates on them that are, in your opinion at least, substantial enough to warrant, a significant increase in the value of the company?
No. What he said was pretty much what he said in the past, David. 1 million Optimus humanoid robots by 2030, 2029. I mean, that was just a ballpark figure that was thrown out there. And look, in previous reports, when they, like last quarter, he said, with tens of millions of Optimus robots. I mean, they're not putting anything out there definitive, David, at this point, either in terms of pricing, what the cost will be, etc. So it's too hard to game that out at this point. And in terms of the Cybercab, it's the same story. They're going to start that production here at some point, but nothing that we can say, okay, we expect this by this date.
Meantime, Phil, you brought us Kelly Ortberg of Boeing in the last hour. Interesting metrics on free cash flow. And then this 737 production, which they think can stay in the high 30s, right?
Yes, and they're optimistic that they will be able to go to the FAA, who they're talking with on a regular basis. They are optimistic that they can go to the FAA at some point and saying, look, we're hitting all of the benchmarks that we have agreed on are key to improving production. We've been able to sustain production at 38 per month, and that's likely to happen sometime in the second half of this year. Is that the third quarter, the fourth quarter? Kelly Ortberg is not putting a time on that at this point, but he is optimistic that at some point they will be able to go to the FAA and say, can we move up to 42 per month? And he's pretty optimistic the FAA, who they've been working with closely, will approve that move once they can show they can hit 38 per month on a regular basis.
That's a big move for a name like Boeing in an obviously very strong tape. Phil, thanks. Doing double duty today, Tesla and Boeing. That's our Phil LeBeau. Let's get back to Sarah Eisen in Washington, D.C. as we continue, Sarah, to monitor some of these headlines on the wires regarding Besant.
Absolutely, Carl. Joining me now is Ajay Banga, the World Bank president, former MasterCard CEO for more than a decade, which is how a lot of our audience knows you. Ajay, it's great to see you. Thank you for having us here.
Oh, it's a pleasure to be with you again.
I mean, I mentioned that there's a whole different sense of urgency here with all the finance ministers coming. They're trying to make a deal with the Trump administration. I'm curious how this big trade fight impacts what you do.
Yeah, well, trade at the end of the day, if you get volatility and uncertainty in trade, in markets, it makes things a little harder for people to make decisions, governments and the private sector. And for the developing world, which is my client base, what this will lead to is volatility in their growth predictability. It could impact them in different ways, in a positive way too. If interest rates go down or the dollar is weaker, remember their debt was denominated in dollars and euros, and their debt was denominated in interest rates that may go down. If all that happens, there's a plus and a minus here. But on trade specifically, there are 2 or 3 things I've been telling them. Yeah. One is, think about what you could do with each other as well. That's really important. Bilateral and regional trade deals. Sarah, they've been on the rise for the last 10 years. This is not a new phenomenon. And trying to do more trade with each other is interesting because there's a statistic that says that while trade has quadrupled in 20 years across the world, and the developing world has gone from 1/5 of that to 2/5 of that, of that 2/5, half is between themselves. And so thinking that through carefully is a real opportunity. Look at Africa. If they were to increase the trade among themselves, you would get a 20 to 25% growth in their GDP.
This is what Europe
years.
said too. I mean, Christine Lagarde said the same thing, which is intra-Europe is so important.
It's an interesting opportunity.
But doesn't everyone need the U.S. ultimately?
Of course, it's the largest market in the world. And at the end of the day, there is a need to negotiate and work out a deal with the U.S. And I also advise this in my opening press conference. Talk to them, get it worked out because it's important. The reality is the developed world, the U.S. in particular, has had the lowest tariffs of any country for a long time. What you've got really, if you look at the economic data, if you bring tariffs down, you will get overall growth around the world. And the question is, how do you get that done in a way that's sensible for all the countries involved? And that's why I'm trying to thread the needle, say, while you're doing the negotiation, please do, and do it quick. But while you're doing it, please also try and work on what you could do bilaterally and regionally, because there is an opportunity there. There's a third thing. Use this to get your own house in order. Because, when you have a challenge to deal with, you can get the political tailwind in your reform system, whether it is for domestic resource mobilization, whether it's for fiscal reform, whether it's managing your budgets, that kind of thing.
How do you think, you mentioned the uncertainty and how it's really damaging to developing economies for planning. How do you think about the economic fallout right now for the rest of the world?
Pretty much the same way. As I was talking about the debt, for example. Look, I think at the end of the day, if you continue with uncertainty, you will get a slowdown in growth, in global growth. And if you get that to happen, the developing world is going to have to think about how they manage through the growth that they need. You can't create jobs for young people without growth. And that's the critical area, why I'm so focused on
I know that's been your big
jobs.
thing is jobs. Like billion young people entering the workforce. Will there be jobs?
So 1.2 billion in the emerging markets will enter the workforce in the coming 10 to 15 years. Currently, the same countries are forecasted to create 420 million jobs. Now, forecasts are not destiny, but you can change them. But you got to do something about it. That's a very big gap. And the reality is, what's the implication of that gap? One, of course, is migration, fragility, conflict, violence, illegal migration. Second is the whole challenge around the growth of what could be great consumer markets, not just for Western and OECD companies, but also local companies. And so I think getting to the topic of growth and jobs is important. People sometimes think that we talk about jobs, they're not talking about development. Actually, that's a false choice. You can't get jobs without development, and you don't get poverty alleviation and development without jobs.
Which is your whole mission.
Yes.
In
I'm
terms
completely
of
on
bringing countries out of poverty. Just on the trade front, though, U.S.-China, we're monitoring these headlines that from the Journal that the U.S. might de-escalate with lower tariff rates. We're reporting that it would be part of some sort of negotiation. Last night, President Trump said it's going to be very nice. How do you process this? Because you're sort of stuck in the middle. The U.S. is the biggest and most important stakeholder in the World Bank, but China is also an increasingly important one.
Yeah, look, I'm not involved with that trade dispute. It isn't part of the World Bank's mandate or remit. I'm quite focused on it being in what we do, which is development. And China is already well advanced as a country. So that's neither of those two countries are places where I operate for operations. I operate there for fundraising, I operate for support, I operate for technical knowledge, that kind of thing. But I don't operate there for activity. So, outside my scene.
When the U.S. and China fight, you mentioned the fallout on developing world. Who gets hurt the most in your purview?
In my purview, it's the developing world. But at the end of the day, nobody wins in a long-term fight. And I think that's kind of where everybody's trying to go. There are positions to be staked out, but there's eventually a negotiation to happen and a deal to be done if it makes sense for both. And, that's what I think everybody's trying to get to. The question is from here to there is not an easy pathway.
You loan, about $120
a year,
billion
120,
a year?
130, including some private sector mobilization.
I mean, it's a huge undertaking. You took the job almost 2 years ago.
Yes.
I remember we talked early, and you said you have a big turnaround to do.
Yes.
How has it been going so far, and how different is it from what you did, for instance, at MasterCard?
Oh, it's completely different. But I mean, the turnaround is interesting. We talked about 3 or 4 things we wanted to do. I'd call it reform more than turnaround, right? There was a G20 expert group that set up a list of things that somebody like me had to work on. And so let me click a few of those examples for you. It just take too long to get things done. 19 months from talking to a country to approval at our board for a project. I kind of put a swag out there saying 12 months by June 25. We're at 14 a couple of months ago. Some of the regions already under 12, some are above 12. I think we'll get pretty close.
Speed it up.
That's good. Some projects within those are 30 days and 60 days. For example, a healthcare clinic in Africa is 30 days approval. But a hydroelectric dam in Central Asia could take 3 years because way more complicated, way more challenges. The right thing to do, a risk-based way of taking the time it takes to get a project through approval.
I'm sorry.
Go ahead.
No, I was just going to ask how climate-focused you are, because that's also been a big focus of the World Bank lately, but has been a little bit of a political football lately with the new administration.
Look, what I had said was that we would put 45% of our financing for climate finance. So that said at my opening press conference as well. If the words are a problem, that's a separate issue to deal with, which our board and shareholders will deal with. But here's what's inside the 45, all of which is directly connected to development and jobs. So the 45 is half what you call adaptation or resiliency. which is heat-resistant varieties of seeds, schools that don't get taken away in a hurricane, roads that don't get washed away in a monsoon, drip irrigation, a school roof that painted white instead of red so it's cooler inside. So these are sensible things to do. They're smart development. The other half is what we call mitigation. Inside that is a railroad for the Lobito corridor instead of trucks. It's bus rapid transit instead of individual cars going to work. It's rice with lower methane emissions or blocking the methane leaks in existing pipes in a gas system in Bangladesh. And then there's 5% of the 45, which is 5 of the total, is energy, in which we've always had 1% for gas, 4 for renewables. That's what's been going on.
Now it's going to be nuclear. That's a change, right?
In June, I'm trying to go back to the board. We've had our first discussion last June, July. Rafael Grossi of the IAEA had come to our board meeting to talk about nuclear. We used that as a kicking point. And now in June, we're going back to the all of the above strategy, trying to make sure that accessible, affordable electricity is what we're trying to do. And that's where I'm going.
Finally, you know, it's interesting time to be here because it feels very important to have all these finance ministers talking about and central bankers talking about the way forward and the strategy. At the same time, I mean, you have had Trump allies, including in the Project 25 report, call for defunding the World Bank and the IMF. So I am curious if you've had conversations with the Trump administration and where that stands.
Yes, we have, and they're very constructive. They're asking all the right questions. People put all this on the Trump administration, but for a second, if you step back over the last 8 months during my IDA replenishment round, my largest shareholders, all their governments changed over. Japan, Korea, France, Germany, the UK, Canada, the United States, Netherlands, Austria. Give me a country that didn't go through.
Yeah.
Each of them asked the right question. What's in it for us to continue working with you? There's nothing wrong with that question. But here's a couple of interesting aspects. First is, if you give me $1 for IBRD, I can leverage it through my AAA bond rating in the bond markets 10 times. And therefore, $1 becomes 10. Bilateral work, $1 is $1. In IBRD, $1 becomes 10. In IDA, which is the money that goes to the poorest countries, $1 becomes 4 because we give away 1/3 of the money, so the denominator is smaller. Second,
So it's a good investment.
it's leverage.
Yeah.
Second is the issue that our expenses are actually paid by the returns of the investment of the loans we put in. So it's actually the emerging markets taxpayer who's paying our full administrative expenses. We're profitable. We add to our retained earnings every year, which is how we've expanded our equity base and expanded our balance sheet. This model of leverage and smart expense management, which was, we were at 69% expense to revenue ratio 2 years ago, we're under 50 today. Doing this well, doing this smart, to me, is all part of that evolution process. Just like, you were asking about the evolution, one last thought for you. The multilateral development banks, if we work together, we can do much more. We just signed a mutual reliance framework with the Asian Development Bank, which means we co-finance projects all over the world, in the Pacific Islands, in Africa, in Asia. If they do due diligence, we'll accept it. If we do due diligence, they'll accept it. Our procurement standards, they'll accept. Their procurement standards, we'll accept. Think of the simplicity of that for a client on the ground. That is the kind of thing, the multiplier effect, that these reforms can do to the work we do. Speed, simplicity, efficiency. These are important. They're the plumbing of the bank. It's what I care about deeply.
Well, Ajay, it's great to get an update on the business and how you're doing and how you're making your case. So thank you very much for taking the time today. I know you have a ton of meetings.
Thanks for being here.
Thank you. That's Ajay Banga, the head of the World Bank, with a little taste of the conversation here, not just around trade, we're all monitoring the headlines, but just really where a multilateral organization like a World Bank or IMF sit in this new world order and in their engagement with an administration that has been critical.
Yes, although judging from Besson comments today, maybe there is a place for multilateral communications, especially with China. Sarah Eisen in D.C. today. Take a look at our roadmap for the rest of the hour. Stocks up for a big second day. We'll talk about whether this rebound is for real or a head fake.
Plus, Elon Musk says beginning next month, he is going to spend a lot more time at Tesla. We're going to talk about whether that will mean the worst is over for the stock.
And Bitcoin back above 90K, actually green again for the year to date. We'll talk about what's driving the recent gains as the Dow's up almost 900 points and back to 5430.
We empower those who act. Those who see the correlation between predictability and probability. those who manage risk by anticipating each movement. Flawless execution, timing, and accuracy. Identify the goal, match power with precision, reach new heights. CME Group, where risk meets opportunity.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology. Live from the New York Stock Exchange, Halftime Report, CNBC.
Of optimism in the face of these 1,000-point swings and these tariff headlines. How are you feeling today?
I feel like I need a neck brace. The volatility has been insane, but I feel pretty good about things. I think that the economy is going to prove resilient. There's going to be some volatility in the economic data up ahead here. We're certainly not out of the woods of the consequences of this tariff war. And the tariff war isn't over. What's really happened is that we had some extraordinarily pessimistic sentiment in the stock market, and I think those vibes got to the White House. And I think the White House blinked. I think it's pretty clear that between the bond vigilantes and the stock vigilantes, that the White House understands that they can't take too hard a line because both markets will fight their intransigence.
Right. You think 4.5 on the 10 is the pain threshold?
Well, I've been thinking 4.5% is the normal bond yield. I've been thinking that 4.5% is where we were before the great financial crisis for several years. And so I think we're at normal. Normal is what the economy has been able to deal with quite effectively. Normal is properly allocating credit in the capital markets. So it's been amazing how calm the bond market has been in recent days, despite all the panic about the basis trade blowing up. It's kind of like what happened when the carry trade blew up. You know, it blew up for a day or two, and then the bond market kind of settled down and quieted down.
I did love your note last night, Ed, where you looked at the DXY and said you're not buying this notion that people are saying goodbye, farewell, that it's actually in a pretty steady channel going back to the financial crisis.
Yeah, I guess, I don't know what it is about panic, but panic has been in fashion, and rightly so. I mean, there's been a lot of noise and inconsistencies coming out of the White House, which hasn't helped. But with regards to the dollar still is on an upward trend that started back in 2010, right after the great financial crisis. The market started to figure out that the U.S. was doing a better job of restructuring its banking sector and kind of healing from the great financial crisis. I think we did quite well all in all during the great virus crisis. The dollar again remained strong. We've basically seen what looks like a 10% decline in the dollar, but actually it's not that bad. If that 10% is in the so-called DXY index, a much broader trade-weighted dollar index, one that's calculated by the Fed's down about half as much. Anyways, I don't think the U.S. is about to implode and lose its reserve currency. I don't think American exceptionalism that was so prominent only a few months ago has suddenly blown up. I think America has the world's largest and most liquid capital markets. How could we not be the reserve currency?
Mm-hmm.
Yeah, I wonder about that, Ed. It's Sarah. I'm here in Washington at World Bank, and we just had this conversation with the World Bank president about how he's encouraging developing economies to trade more with each other and sign trade deals with each other and lower their barriers. It's something that the ECB president yesterday told me. They're encouraging intra-Europe trade more and to lower barriers. Does all of that make ultimately, if that is what comes out of that, does it make the U.S. a less attractive investment destination if we're not as part of global trade and they open up more with each other?
Well, it's always nice to have a nice house in a nice neighborhood. And if the world is going to trade more, it hopefully will be a more peaceful world. There'll be more interdependencies. And I think at the end of the day, all this trade war is going to lead to is actually lower tariffs with fair trade. So I'm still optimistic that that's the end game of what the White House wants to achieve. They've got, of course, some other conflicting goals with regards to that, but they clearly want to also have national security issues dealt with regards to tariffs. They're not going to give up, I think, on steel and aluminum. I don't know why we need tariffs on autos, but there are some national security industries that we do want to make sure we produce here.
Hey, finally, Ed, I know it's just one day, but I am curious to get your thoughts on oil, which even in this tape has been unable to catch a bid. We're still below 62. Yeah. You think there's some scarring from all of this that'll manifest itself in the way of activity?
Well, I think the big problem for the oil market is there's lots of it, and the demand has been weakening, especially out of China. Not only is China's economy fundamentally weak because of the bursting of their property bubble, but they're all driving electric vehicles. They just need less gasoline. So I think it's a combination of a weak China, a China that's becoming more energy efficient. And that probably explains, I think, why oil is remaining low. And by the way, that's a big positive for U.S. consumers, for other consumers around the world.
Yeah, absolutely. And for the inflation prints we'll get in the weeks to come. Yeah. Ed, thank you. Always good to check in. Great notes this week, Ed Yardeni. Let's get a news update this morning with Silvana Hanel. Hey, Silvana.
Hey, Carl. Good morning to you. Mourners are gathering at the Vatican today to pay their final respects to Pope Francis. The start of 3 days of public viewing before his funeral on Friday. The Pope is lying in state in St. Peter's Basilica, and tens of thousands are expected to attend. Vice President J.D. Vance doubled down on the administration's threat today that the U.S. could abandon peace talks over the Russia-Ukraine war if both sides don't cooperate to end the war. Vance told reporters while on a trip in India that, quote, it's time for them to either say yes or for the United States to walk away from this process. And YouTube turns 20 today. The Google-owned company, if it were a standalone business, would be worth around $500 billion. That's according to analyst Ab Moffett-Nathanson. And according to SimilarWeb, it's the second most visited site in the world, lagging only behind Google with more than 20 trillion videos uploaded to the site as of this month, David.
Yeah, we talked about that when Moffett-Nathanson came out with that valuation. Would be above that of Netflix, which is $450 billion. Not clear that it will ever trade publicly, but we'll see. Silvana, thank you. Up next, we're keeping an eye on Bitcoin. It is rallying back above 90,000. A closer look at what's driving those gains. As we head to break, by the way, check out shares of GE Vernova. It's surging on its latest earnings. It was a beat, swinging to a profit, and of course benefiting from the larger rally going on right now in stocks, with the S&P up some 3.2%. We're right back.
CNBC. Live ambitiously.
Hello, everyone. I'm Julie Sweet. Welcome to another edition of Reinvented with Accenture. Today is a very special episode. Normally, we're talking about reinventing a company. Today, we're talking about reinventing a country.
Payments have to be fast, they have to be secure, they have to be convenient, and they have to be inclusive. Those are things which are not negotiable. And when you think about it, there is no single commercial transactions which doesn't rely on a payment at some point.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
Preparation.
Confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Breaking news, market moves. Scott Wapner from the NYSE. Closing bell, CNBC.
China as a developing country. It's notable to me because we just heard from Ajay Banga, the president of the World Bank, who's been in discussions with the Trump administration, and he was careful to say China is no longer a developing country. So they're clearly getting the message amid questions going in about whether the Trump administration would prioritize or look to pull money and defund the World Bank and the IMF. The U.S. is the largest shareholder in both of these institutions. So it's interesting to hear Bessent on one hand back them, but also sort of share how they fit into the Trump administration's worldview about what they should be doing.
Yeah, really interesting, the convergence between the meeting and Bessent's comments today and the tape. Speaking of which, Dow continues to remain close to session highs, up 1,100 points now. We're back above 5460. That's a 4% gain on the NASDAQ, 3.3 on the S&P. Every sector's green except for energy, which we mentioned still lower, but VIX is below 28, and the dollar has recovered somewhat, David, but hasn't quite managed to get back above 100 on the DXY.
Yeah, talked a bit about that with Yardeni. All right, we're keeping an eye on shares at Tesla, of course. They're, I think, right at session highs right now, up some 8+%, despite, of course, what was not a particularly good quarter, at least if you judge from the top and bottom lines. Auto revenue, for example, declined by 20%. CEO Elon Musk, though, delivered some news on his leadership at the company.
Starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency is done.
Joining us, William Blair's Jed Dorsheimer. Jed, why you have a buy in the stock? Why?
Well, one, I think that what Elon has built and done and kind of moving to vehicles with a lower cost basis is, and on the energy side of the business, that's something we really like. And I think that people underestimated energy. And I think, quite frankly, last night was an example of that where, 14% of revenues, 25% of profits, which showed some resilience. So everybody knows that the auto side of the business has been under pressure. I guess it's debatable, could we have, should we have pulled the plug on that from a near-term trading move? Maybe. But I think, looking forward here, the energy business is operating better. Elon is stepping back from Doge to focus on Tesla, and you're getting news out of, de-escalation from a tariff perspective. And if that plays out, I think Tesla, has more upside than downside.
Yeah, I noticed from your coverage list, it's not a surprise you might be focused on the energy business, given you do focus on a lot of those companies in that general industry. We haven't talked that much about it. Obviously, a lot of the enthusiasm seems to be around robots and auto and robot taxis as well. What are your expectations for energy then as a percentage overall? Will it continue to increase in terms of the overall percentage of profits of the company?
Sure. I mean, listen, it does have tariff exposure. So that is a vulnerability here. But if you do get a de-escalation, we have said that the return on invested capital of Tesla's energy business is better than any of their other businesses from our perspective. And I think we're seeing that bear fruit. Our analysis revealed that the need for mega packs and battery storage is far greater than most expect, largely because the variability that renewables have pushed onto the grid, both domestically and abroad, has created a lot of problems. And so to fix some of those problems, you will see a need for more battery storage. So we're very bullish on that. In fact, I'm out here on the West Coast at an energy conference with a lot of policymakers here. And, hopefully, we'll see. But I think what you're probably seeing is some capitulation off of a bottom. The resilience, you might even see some short covering that's driving this. But I think the resilience from energy is definitely the highlight.
Yeah, it would certainly seem to be an important component of the overall earnings picture. As for Musk coming back, I mean, you see it clearly as a positive in terms of his focus?
Yeah, I mean, that being said, there's brand damage. And so, we have to see how, I think this puts the auto side squarely focused on robotaxi and the launch of that. And that increases the risk profile. We're disappointed, quite frankly, to see that there is no Model 2. We were, quite hopeful that would fill a nice gap for the auto to complement what we like on, the energy side of the business. And so, if Elon can come back and help with that focus, then that's going to be a positive, and we'll see if this brand can return.
Yeah, and real quick on tariffs, you mentioned the impact perhaps on energy. And listen, even though they source a lot domestically and obviously manufacture domestically, what do you think the impact will overall be of tariffs on both autos and energy?
Oh, for the energy side of their business, it would be a clear negative. If you continue at this rate, that business will see the profitability hit. So that is a risk. So, we're clearly in the camp of we're monitoring. If Besant's comments bear fruit and we see some de-escalation, that is a driver. But if it stays at status quo, that is a negative.
Okay. Jed, appreciate your time. Thank you.
No problem. Thank you.
Still to come this morning, we're monitoring the Treasury Secretary, just wrapping up his comments. Speaking about trade, we'll get the highlights as stocks continue to build off of yesterday's insane rally. Stay with us.
CNBC. Live ambitiously.
Don't miss our all-new weekday lineup. U.S. Markets Edition, Squawk Box Asia, The China Connection, Inside India, Access Middle East. CNBC, first in business worldwide.
Live from the New York Stock Exchange, Halftime Report, CNBC.
Home to the world's biggest population and a fast-growing economy.
Is the EV story resonating amongst Indian consumers?
CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse.
Narendra Modi seeks a historic third term.
Several indicators. They cannot afford to look the other way.
It's all part of the normal flow of market forces.
The stories, people and businesses behind its rise. This is your gateway to India.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.